I want to bring up some of our traders that are joining us. John O'Donohue at Cowen and Company, and also Alan Knuckman over at the CME to take us through the bell in the opening session. And guys, let me just maybe I'll just point to John first. You know, we are basically seeing a higher open right now. I mean, we're almost back to where we were before this Dubai crisis. What does that tell you about the markets?
Well, I think the school of thought yesterday was torn between whether Dubai is like the final shoe to drop or whether it's just more of a potential contagion to the market. And I think the market's reaction is that, you know, we've seen this happen before in Ireland. We've seen it happen in Spain. We've seen it happening in a lot of the emerging real estate blow-ups that we've seen, and Dubai is more of a hiccup than it is supposedly a contagion. So we're kind of back to, as you said, exactly where we were a week or so ago, and the carry trade that's out there, the weaker dollar, the market moving higher just continues to.
So the rally still has legs.
Yeah.
And
John, what about the financials? We were just talking about them, some finding buyers this morning. What are you hearing from clients right now? Do they want to buy financials? Are they on the sidelines for the rest of the year? What?
You know what's interesting is and I heard you guys chatting a bit earlier, if you think about Europe, Europe is very regionalized. And being a native of Ireland myself, I can tell you that real estate bubble burst and is still probably in very, very deep trouble. If you look at the United States is very regionalized. So the regional banks that have not really had to deal with an awful lot of this blow-up, if you will, vis-a-vis their real estate, and they would be maybe more in the Mid-Atlantic, maybe in the sort of the Carolinas areas, places like that are going to do fine. So I think you're going to get a very bifurcated move here in some of the regional banks.
Alan, I want to bring you in. You agree?
Thank you. Well, I'm looking at the markets in general, and they've been very resilient, and you mentioned the dollar. The key indicator here to me was seeing the dollar have that little bit of a bounce, sell back down, and now it looks like it's going to take out those recent lows, and so these trends are still very much intact. I think crude oil is going to be a good indicator.
I'm talking about the banks, though. I mean, John was just saying that, you know, the bifurcation of these banks, what you're seeing is you're seeing some banks do well in some areas and some are not. And so how do you trade that?
Well, as far as the banks go and the financial stocks go, we've seen a nice recovery, and you could see that action last week when we had about a 3% dip in some of the financial stocks, trying to figure out who was involved here and what kind of exposure there was. You know, I still think there's more upside overall in the market, but you know, I'd be a little bit cautious again with the financials up here. And as far as banking goes, that's you know, not something I'm focusing on. I think there's more value in some more depressed physical goods, I think.
Hey, Alan, very quickly here, we've only got about 30 seconds left. December 1st, you only have another 4 weeks to play the end of the year. How are guys playing at? What are they trying to buy?
Well, there's a concern because there's not a catalyst right now. We're at the end of earnings season. You know, we're coming up to the holidays. As far as floor guys, we're looking for that dollar to press lower, and that could increase the value of crude oil. Take out those highs at 82, 83. You could see a nice little pop in that market, and that could be supportive of stocks again with Chevron and Exxon leading the Dow, so that could drag everything up. Okay,
Alan, great to have you. Thanks so much. I want to just give John the last word because, John, you know, we saw this GE Vivendi deal take place. M&A, is that going to get this market unstuck as we see more of these deals towards the end of the year?
Well, I think, you know, with historic levels of the dollar here, cross-border M&A is something that wouldn't shock me to sort of see frequency pick up in, especially at the start of the year. And we've seen that in various cycles as the dollar has hit levels like this back in the late 80s, for example. We saw a lot of that sort of cross-border M&A where whether it was Japan that came in or the Japanese that came in and bought American real estate, all for the wrong reasons at the wrong prices. But we'll see.